This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe Rabil with Invest Like a Pro, and I want to show you today how to go about using two time frames together to make sure I'm continuing to watch a trade even though the lower time frame is not offering an entry, at least one that does not seem obvious. And sometimes you have to keep watching and eventually a trigger will show up. So I'm going to go through that. First, let me just tell you, if you have an interest in learning more about my approach, I would suggest going to rabilstockresearch.com/book to get more information. All right, let's go to this example. So I'm using the XLC, and what I want to do is I've got 4 time frames up, but we are going to focus in on the daily chart and the hourly chart. All right, now I've already scrolled over to December. All right, because I want to zero in on this aspect right here. And one thing I can do on this program is if in fact, I'll use the circle. So I'm going to circle this area just so you can see that's what's being circled on the hourly here. Now let me narrow that down so you can really see it's what we're focusing in on. So this is the area right here. All right, and as this is pulling back on this time frame, now I'm going to go through the things on the higher time frame that attracted me, and then I'm going to show how I'm waiting and waiting and waiting, and eventually a trigger does show up. All right, now let's start with this higher time frame. I'm just going to zoom in on this for a second. Now we make a move. Look at how we undercut this low first, right? We had this move to the downside and we undercut the low. It lasts 2 days below those levels and then it comes right back up. So very dynamic reversal off the bottom. A lot of times you're going to get some lag in the ADX when that happens. Even MACD will lag as well sometimes. Then we make a move and we actually go from a break down to a break out, and now we get our first pullback. All right, so as this is starting to pull back towards the MA, once it gets in the vicinity of the MA, we really want to start watching for a potential entry point. All right, that is where we want to go down to the smaller time frame. Now, if you look at what's taking place on this time frame, you could have been potentially interested as this was pulling back for 3 or 4 days, and then we got a little gap up or something like that, right there. But you want to make sure that your lower time frame is giving you the type of evidence that you're looking for, because that was right here. That was on this bar. That was not a signal. There was nothing happening yet on this time frame. So one of the things that I talk about in the second course, my compression-based swing trading course, is how to handle gaps. And this gap would have, if you learn the strategies that I teach, you would not be interested in taking this gap up. It immediately kind of gave it up. Now, if we would have subsequently turned back up sometime in the next day or two, then we would have had a signal there. But nothing at that point really qualified. We didn't have a trend line that we could draw in, and so we couldn't do that. The only thing we could have done is waited for a higher low to form. But if you notice what happened though after that, so we went into the zone and then we came out and we went to a new low. All right, now out of my course, I call this a trigger 4. This is a trigger 4 where we go out and we go to a new low and we get follow through to the downside. All right. You have to understand how these signals relate to the moving averages and what's taking place. Sometimes you go in the zone and you have no follow through. Sometimes you don't go in the zone at all because these moving averages don't even touch. Other times you go right through the moving averages, right? You got to know how to handle all of these different situations. There's a lot of them. So we go into the zone here essentially, and we come out and we break to a new low. Once that happens, we really have to wait for confirmation coming back to the upside. Why? Because this time frame has turned into a bearish trend. We're below the 18. The 18 is below the 40. Price is making lower highs and lower lows, right? You see how we're trending to the downside? So this is now a bearish trend. That's a lot different than just coming in the zone, coming out, and turning back to the upside. That is not a bearish trend. Once we get a bearish trend, we need more confirmation coming back up, more than just a break of the two moving averages. All right. Now, the other thing that you can look at is notice what's taking place on the MACD. MACD is seriously crossing the zero line at this point on this move here, and then the follow through. Look at how far away. This is not just overrun. This is the serious break of the zero level. Look at what the ADX did on the lower time frame. All right. Now, typically, I would, if this red DI move, see how red is causing the blue line, the ADX line to go up? That's a negative peak. All right. That's a negative peak. This is a positive peak because it's based on the green. All right, now once we figure out, in most cases when this goes to a new high like that, I probably wouldn't have an interest in it. However, we're going to continue to monitor the daily chart as long as the higher time frame has a rising 18 and we're above the 40. All right, the 40 is rising. As long as this 18 doesn't roll over, we can continue to monitor this time frame for an entry on the lower time frame. This is really important. If this line rolls over, then we exit out and we just cross it off our list. So this is really important for people that are, say, following the list that I send out on Wednesdays. Followed up with the subscriber video. A lot of times I'll say we're looking to buy a pullback and looking for entry, and how we're going about doing that. But you know, the next few days might weaken. You have to determine whether you take this off your list or not. You have to keep making sure you're maintaining your list. This is really important. Now, if you're not taking my research, you still got to do the same thing with your list. You have to determine which ones to delete and which ones not. Otherwise, the list will just keep growing and growing and growing. By the way, if you're enjoying the content, hit the like button and also subscribe. I keep referring to this as sort of a master class in technical analysis, especially when you're using trend and momentum together. So, you know, in order to support the channel, hit that like button if you enjoy this. So what we want to do in this situation, as long as this is rising and it's above a 40 that's rising and price is above the 40, it is still considered a setup on this time frame. All right. Yes. A lot of times it takes more time when the MACD crosses down through the signal line, but look at the ADX on this time frame. Very strong reading. Both MACD and ADX confirm the up move. So we want to play the pullback until the 18 rolls over or when we break the 40. Now, as long as that doesn't happen, we are going to continue to monitor what's taking place on the hourly. Now, we go make lower highs and lower lows. We keep doing that. Now, we're not going to play a divergence signal in this situation. All right, it's starting to show divergence off the low. Why? Because we're in a bear trend here. We need more confirmation. And obviously, with what the MACD is doing on the higher time frame, we need to see if we can get something more significant to take place. So now we actually see a move to the upside, right? New strength, new green DI, strength to the upside. And now we want to buy the first pullback, but it comes down through and breaks the 18 MA, all right? Kind of violently. And so we have to keep waiting now. Now we're waiting and we're letting this consolidate. It moves up and forms a pullback here, which is a pinch play. Green DI is holding. You see how there was no red selling here? This was weak during this decline, even though we got this big gap. The gap tells us let's not buy this second, but we want to keep monitoring. And at that point, the ADX didn't show any strength to the downside. So we could play this pinch play entry right here. This is where you want to get in on a stock that started pulling back way back in late November. You're entering in mid-December. All right, you've got a stock that was looking really good here in November, and you're waiting and waiting, and you're not getting in until the middle of December. But it still qualifies, based on my approach, it still qualifies as entry using all the strategies that I'm talking about, especially when you have this bigger bias going on the higher time frames. You want to keep monitoring these stocks, even though they don't look all that great. Anything that is in between the 18 and the 40 is still a viable trade. Now, classic type pullbacks are this pullback to the 18 and we get an entry, pullback to the 18 and get an entry. But don't if you like the bigger picture pattern, do not eliminate these as soon as they cross the 18 to the downside. Now, if you want to maintain your list and keep it smaller, you might do that, but it should pop up again once this starts to emerge. As long as that 18 is still rising, and the 40 is rising and prices above the 40, and we've got a pretty decent reading on the ADX and the MACD before the pullback, we want to continue to maintain this as a potential idea. All right, so this should help you determining which stocks you keep on your lists and which ones you eliminate. Let me know if you have any questions, and we'll see you next time.